Okay, since we're back in a shutdown here in Ontario, I thought I'd provide some value and answer some of the real estate questions that I get asked on a regular basis. So one question I get asked a lot is that what do you do if a tenant doesn't pay rent on time or is constantly late? So this is obviously a massive concern for most first-time investors. And the way it works in Ontario, where I'm an investor, is the first thing you can do is provide them with an N4 on the second of the month. So it can't be provided until the second of the month, and this gives them 14 days to pay rent. So the way I handle it is very passive and not aggressive at all. I show up and personally hand it to them, and I explain the situation that I'm just covering myself. I understand you're going to pay me on the 7th, but this will give you 14 days to pay. If you don't, then we're going to move on to the eviction process. If you do pay, no problem. We rip this up and we move back on. I understand life happens and it's all good. So I think having that relationship with your tenant is extremely important. Now, if it does go to past the 14 days, so now it's the 16th of the month, then you would file what's called the L1 with the landlord and tenant board. There's a fee to that, and then you're going to get an arbitration hearing date, and you're going to meet at the court situation and maybe have an eviction process or maybe create a payment plan. One thing I like to do to try and avoid all of this is I built in a late fee into my rent. So you cannot charge a late fee, but I build it into my rent. So if my rent's gonna be $1,200, I charge say $1,250, maybe $1,300, and if they pay me on the 1st or before, then they get discounted down to the $1,200. This encourages them to pay on time, which is great. And if they don't pay on time, at least they get paid for my hassle. So it does limit the amount of times a tenant pays because it does add up over time. Now, if a tenant is paying late all the time, maybe 6, 7, 8 times in a month, you should have very good records of the N4s and the late deposits, and then you can go through and give what's called the N8, and that's for not paying rent regularly on time. So if there is a record of this and you keep good records, it's a little bit difficult, but it is the process here in Ontario. Now, with all that said, during COVID right now, there is an eviction ban. So there's a backlog at the landlord and tenant board, and everything is going to be much longer than normal. So I can't stress it enough that tenant screening is probably the most important thing you could do before you put in a tenant. Make sure they're good, and then have a good relationship with your tenant so communication is open. And if they do have issues, especially with COVID, you could work something out, because I do think in these times we should be compassionate and understanding of people's situations, because they obviously might not be doing this on purpose. Another question I get a lot is how to buy real estate with no money down, which is a great question. And if you can pull this off, it's probably one of the best ways to invest in real estate. So one way I know a lot of people that make a lot of money with very little down would be called wholesaling. So this is where you're going to get a property under contract. Usually you got to be 50, 60, 70 cents on the dollar. And then you're going to assign this contract to another investor. So the better the deal, the more you're going to get paid. So you're not actually going to be holding real estate in this situation, but you are going to be making money each transaction. So it's a great way to get started. It's going to teach you how to negotiate, how to find deals, how to buy a property. Another way would be to have owner financing. So seller financing is where the owner is the bank. So if you can find someone who has a building, let's say, that they've owned for a long time, they're looking at retiring, this is a great opportunity for both of you, where maybe they've got the place paid down, so they're going to hold the mortgage, and you're going to pay them monthly. They get paid cash flow passively, which is wonderful for them, and you get a property with little to no money down. Okay, so this is all going to come down to negotiations and hunting for deals. Another great way would be joint venture partners. So you could be the active partner, and then you look for someone with money that just wants to invest passively. So you find a money partner, and you're going to be doing the work, right? And potentially you can structure this deal so many different ways, and I'd have to do almost a separate separate topic on how to structure joint venture partners, but everything is negotiable. So you can negotiate a 50-50 split. You can, negotiate an 80-20 split, 60-40. It really doesn't matter. Whatever you can both negotiate, a win-win deal for you and your money partner. Another great way, if you already own real estate, would be to have a line of credit or refinance a property you already own. So you can use the equity in your home to buy real estate with no money down. And this is a great way if you've already established some real estate or some equity in your homes. Another great way, maybe not so great right now during COVID, but a great way for someone who's young, a hustler who wants to get started in real estate investing, would be called Airbnb arbitrage. So what this would be is you find a property that's for rent, and you would ask the landlord if you could rent it out Airbnb. So I actually do this. I own a building, and one of my tenants rents off of me, and then they rent it out for Airbnb themselves. So they make the difference. So they pay me $1,200 a month. If they make $2,000 a month, then they're making $800 a month without owning any real estate and without having any big money down. They might have some investment in there, but it's really small compared to buying a piece of real estate. So I hope that helps. That's a few ways that you can get started in real estate investing with little to no money down. And if you can pull that off, I highly, highly recommend it, because assets like real estate are going to be a great hedge against inflation that we are seeing massively right now. And question number 3, a question I get asked as well a lot about, maybe not with this term, is called, what is house hacking? This is a new term to me, actually. When I first got started, we just called it buying a house and renting out the other unit or renting out other rooms. But now the cool kids call it house hacking, and I kind of like the term. So what happens is you would buy a building or buy a house, maybe with 2 units or maybe 3 bedrooms, and you're going to either rent out the other bedrooms or you're going to rent out the other unit, and that's going to make your cost of your mortgage a lot cheaper, potentially free, and it is a great way to get started and get ahead in life. It's also a great way right now. Any house, pretty much, most houses now, thank you to the government, is you can add a secondary suite to your home. So if you're finding mortgage payments being difficult, or that you're constantly chasing and you want to get ahead in life, you can add a garden suite, or you can add a secondary unit, maybe in your basement, to supplement your mortgage payment. It's a great term, house hacking. Highly recommend it. First-time home buyers, people just getting started out. It's exactly how I got started out. If you want to get ahead in life, house hacking is where it's at. So if you have any questions on that, let me know. All right, question number 4, is real estate truly passive? And the answer to this would be yes and no. It really just depends on how you structure your business, and there are ways to do it either way. So if you just bought a duplex today, chances are it's not going to be totally passive. It's not just money coming in and no work. You're going to have to take phone calls. You're going to have to be on top of maintenance and doing things. If tenant's not paying rent, you're the one who's going to have to deal with it. But if you want to invest in real estate truly passive, it is possible. One way is the joint venture model I was talking about earlier, and you can be the money partner. So all you're doing is giving money for a deal, and the other person's doing all the work. So all you do is collect your checks and put up the money, and totally passive. Another way would be to do seller financing. So again, private money lending. So you're just lending out money. So that could be totally passive. So all you're doing is lending out money as a mortgage, and you're getting money back. Unless you're not getting paid, you hire a lawyer and you're going to do a foreclosure. Another way would, once you have some equity or have some cash flow, or you buy a property with some great cash flow, if you structure things properly, it can be passive. So you have a property manager and everything's operating like a business and you really are detached from the business. Totally possible, just not likely early on, especially in this market. It's really hard to find a property that's going to cash flow so much that you could have a property manager and it be worthwhile to you. Not saying it's not possible, just highly unlikely. Bigger buildings it would be, but just not a duplex. So I think you should have some realistic expectations, or at least know what you're going into when buying a real estate investment. It's not 100% passive like many gurus would like to sell it, but it can be. And so joint venture, private money, two great ways to be totally passive, and highly recommend it if that's what you're looking for.